Hi everybody, this is Phil Holoka from Complete Captive Management Services, and today we launch our next three-part series on the direct writer captive. And today's conversation involves what are the roles and responsibilities of a direct writer captive. But before we get into the roles and responsibilities, how about we define what a direct writer captive is? Well, in the world of captive insurance, the captive is either a reinsurance captive or it's a direct writer captive. And if you recall from a number of weeks ago when we did a fronting carrier series, the duty of a reinsurance captive is to reinsure the policies that have been issued by the fronting carrier. In this relationship, the schematic here is the captive issues the policy to the insured, and then the insured pays a premium, and the premium is deposited into the captive's bank account. This is counter to a fronting arrangement, whereas the front, if it were here, the front would issue the policy and the insured would pay the premiums to the fronting carrier. And when the insured pays the premiums to the front, that is called a funds withheld relationship. Okay. And if you recall, the captive is still a licensed insurance company of which the domicile has granted a license to conduct insurance business within the domicile of choice. Okay? All right. So what's the sole role of the direct writer captive? Well, it's to issue a policy. And that's no different than a fronted arrangement, whereas the front issues the policy. In this case, the direct writer captive issues the policy. Okay? So, the responsibilities. If you watch the fronting carrier roles and responsibilities, you're going to see much of this stuff is identical with a few nuances. One of the differences is the direct writer captive generally offloads the daily insurance company operations off to a captive manager. Okay? Now, that's not to say that the captive itself couldn't staff and be the captive manager, but generally the captive has to be rather large for that to occur. So, let's assume that a captive manager is assuming the duties from here on down. Okay? Now, the captive manager then supervises or even possibly conducts the underwriting of the policies that the captive issues to the insureds. Now that will be new policies or renewal policies, but many times the captive manager will offload those duties of underwriting to an actuary, to an underwriter that has no connection with the insured and the actuary or the underwriter. And some of the reasons for that is the insured may inject influence onto the captive manager, which may either alter or affect the underwriting of the policy. So in order for the captive manager to remove itself from that subjection, they outsource those services to a third party. That is generally called a arm's length transaction for policy pricing. Okay, the next part is because the captive is collecting premium, there's a heavier lift for the captive manager because now there are debits and credits that need to occur on a more frequent basis. Okay, so the captive manager needs to bring a bookkeeping skill set to the table to record the premium invoices that go out and the revenues that come in by way of the premiums. So the captive manager has always been tasked with the duties to assemble the financial statements. But when it's a direct writer captive, the captive manager has to do what was otherwise done within the border row report that, if you recall, is generally handled by the fronting carrier. Okay? So there's a heavier lift with the captive manager for the daily bookkeeping services. Okay. A direct writer captive generally has what's called capitalization requirements. And those capitalization requirements are expressed within the business plan of the captive, and that will be approved by the regulator. But the captive manager will manage and invoice and collect those capitalization payments. Generally, those are called surplus or excess, and every insurance company has those requirements. In a direct writer captive, those surplus deposits are generally recorded as paid in capital, and that is expressed on the captive's balance sheet within the equity section. Okay? Just like a fronting carrier, the TPA will send the claims to the direct writer captive or the captive manager, and then the captive manager will interact with the TPA. They will vet out the claims to make sure they are legitimate and they are being paid at the right reimbursement. So this is really no different than a fronting carrier arrangement. And then lastly, the payment of claims. So because there's no fronting carrier to pay the claims, the captive, who is the receiver of the premium, holds the checkbook. Therefore, the captive manager really acts as a steward of the checkbook for the captive itself. Okay? So, this expresses the roles and responsibilities of a direct writer captive. It's very similar to a fronted arrangement with a little bit more efficiency by way of there's no middleman or intermediary between the insured and the captive. Okay? Next week, we're going to talk about fees generally charged within a direct writer captive. So until then, have a good week. Bye now.